Iowa State Extension livestock economist Shane Ellis is our cattle market analyst this week. U.S. Department of Agriculture data released last week indicated Nebraska accounted for a nation-leading 15% of the country's total commercial red meat production in February. The agency's latest cattle on feed report showed a slightly higher March 1st inventory in the U.S. compared to a year ago. Placements during February were 1% lower than February 2016, while marketings were 4% higher. Feeder and live cattle markets experienced a very positive mid-March, but both slipped towards the end of the month. We talked with Shane Wednesday afternoon and started by asking for his analysis of recent price movements.
Looking back at the last couple of weeks, we really had a nice strong run-up in the prices. When you see that kind of run-up at the prices, you know it's going to have to do a little bit of a correction. So it's not to be unexpected, but compared to what we were a few weeks ago or even a few months ago and everything, it's not too bad of a situation. Of course, we'd like to just see it keep climbing, stair-stepping higher and higher, but we got to accept a little bit of correction happening, especially as we're going into this time of year and there's some just the number of animals that are coming into the market. We've got to expect a little bit of steam to come out.
So what things contributed to the run-up?
Well, of course, we usually see this as a time of year that we're getting ready for that, believe it or not, the grilling season. So usually the spring run-up, it's usually a seasonal trend that we see happen. So every year we kind of wait for it to happen about this time, that March, April time. Those animals that are coming in, being processed now, those are going to be the animals that are going to be ready to go out there and hit the grills at the first part of grilling season. So this is usually that prime spot, so we're not too surprised to see that happen. We'll see if we can continue to hold on to it for a little while. Usually we hit a peak and it comes back down. I don't see that happening right away. I see us continuing to have some decent, fairly steady strength in the market. I'm not saying that we're going to gain another $10 or something. I'm sure everybody would appreciate that. But I see some steadiness coming and holding in the market out there. There's just some fundamentals with the supply and demand that's out there, some of the consumer confidence in the markets and everything else. All of that's going to play into the end use of proteins. And I think that that's going to be the thing that kind of gives us some backbone to this market.
I want to talk about one of the international issues that agriculture has been looking at, and it's down in Brazil where there are some concerns about meat quality. That led to some export restrictions on Brazilian beef for a few days. Was there any spillover benefit here in the U.S.?
Well, we'll see what happens further on. I mean, if you're looking at the international market, that is one. But if you look at the primary markets that Brazil sends their beef to, you're looking at the European Union, maybe China, Chile, Egypt. Those are kind of the big markets that closed down but have actually opened back up again. So it was a very short period of time in there. I think not all the packing plants were affected by this police probe that was happening. And so I think they're going to kind of come back out of that. Could it be of benefit to us? It could be, but it will be probably a short-term benefit once they kind of get everything to simmer down a little bit coming from that market. It's a different kind of beef coming out of that country compared to what we specialize in the United States. So could it be a benefit? Well, it's not going to hurt us, but at the same time, I don't see us having a long-term benefit from it.
Anything noteworthy in the latest cattle on feed report?
Well, just looking at some of those different numbers, just the number of animals that are out there. I think that we were expecting this as far as the number of animals coming in to be larger going into the year and throughout the year. I don't think there's anything too unexpected, just the supply of beef that's going to be coming into the full market. That's going to be, of course, it's got to come from somewhere. It's going to be coming from those feedlots. So as far as any numbers in there that I found surprising or that we saw surprising within the industry, I think most of those are kind of coming in where expectations were. We just hope that as we kind of roll through this, we can pick up some of that extra demand out there as these additional cattle supplies are coming through.
Probably approaching the back half of calving, at least in this state. As producers look at what margins could be like for those calves, what do you think they could see?
Not as good as what they were a couple of years ago. I think that this year will be a bit of a repeat of what it was last year. And I know for a lot of producers, they're sitting there going, well, we were kind of scratching by to make things match up and keep things going. Last year, I think that this year will be another repeat of that. While we've had some steadiness in the fed cattle market, The fact of the matter is we just have a lot more feeder animals available than what we've had in the past. And I think that that's going to add that additional supply that's really not going to give us that bolster in the feeder cattle market that we'd like to see. We might see 5-10 cents more overall for the year average on those feeder animals, which, okay, we'll take that, but it's still going to be a far cry from getting us back to the point where we saw those triple-digit profits that we had and we're getting used to for all those years. So it's going to be fairly tight to, for a lot of our producers, might be a break-even year, might even see a few of the producers that have that higher cost of production out there. That's going to be a factor that's going to push them back down there, maybe even below break-even. The nice part about this whole situation right now, we're still sitting on fairly decent hay stocks throughout most of the United States. And if you're looking for concentrated feed, that's also still cheap. So there are some things that are helping out a little bit, but usually when it used to be that feed was really cheap and feeder cattle would pick up a benefit from that, we're just not seeing that same strength or interest in bidding up those prices on those feeder animals that we've seen in the past.